Did you form an S Corp to save on taxes, but now you're wondering, okay, how do I actually pay myself? Should I write a check? Should I run payroll? Do I just transfer money from my business account to a personal account? Trust me, you are not alone. This is one of the top questions that I get from business owners and real estate professionals all the time. So today, I am going to break it down for you. How to pay yourself as an S Corp the right way. My name is Keisha Rondino. I am a real estate and business CPA and tax strategist. I teach you how to use the tax code so you can pay less in taxes, keep more of the money you make, and build wealth in your business and your investments. So let's get started. Let's start with what an S Corp is. So an S Corp is a tax election, which means that you don't form an S Corp with the state. You form either an LLC or a corporation, and then you file a form 2553 with the IRS to elect to be taxed as an S Corp. And many people do this because they've heard that you can save on taxes. But how? What is it about an S Corp that actually helps you save on taxes? This is because as an S corporation, you only pay self-employment tax on the salary that you pay yourself and not on the business full profits, which could be huge depending on the amount of money that you're making. So when you pay yourself as an S Corp, you can either pay yourself either as an employee, as a shareholder, or both. And the way that you determine is based on the role that you have within a company. So if you are affiliated with the day-to-day operations and you have a major role in what's taking place all the time, then you are considered to be an employee. If you do not operate within the day-to-day operations and you're pretty much owning the business, just owning it and don't have a say-so on what's happening ongoing, then you may be classified as a shareholder. But many S Corp owners, if you're a small business, if you're a real estate professional, most of the time you operate as a hybrid, meaning that you are an owner of the company that owns it, but you also oversee and work day-to-day within the business, which also makes you an employee. As an employee, you pay yourself a salary through payroll, just like you are working for someone else. Now, when we say salary, it's not just any salary. The IRS says that it must be a reasonable salary. And so I'm pretty sure your question is, what is considered to be reasonable salary? So according to the IRS, reasonable salary or reasonable compensation is considered to be the value that would ordinarily be paid for like services by an enterprise under like circumstances. Reasonableness is determined based on all factors and circumstances. What does that mean? Basically, you must ensure that what you're being paid within your company as an employee is on par with what an employee within a similar company, title and responsibilities is going to be paid within your industry. And the way that you determine that is that you're going to consider the actual business industry and where you're located at, how many hours per week you work, how good you are at your job, the type of work that you do, and the local cost of living of where you live at. Now, when you're considering all of these things for reasonable salary, there are two common ways that you can come up with what your reasonable salary is going to be. One is the cost approach, the other is the market approach. The cost approach focuses on you and the variety of tasks that you do on a day-to-day basis. The market approach involves market research to determine the average salary of what it is that you do. Now, within both of those approaches, there are several tools out there that you can use in order to determine what your reasonable salary is. You do want to talk to your CPA about it because once you determine what that salary is, you want to be able to justify to the IRS why your S Corp is paying you that amount as in S Corporation. They're going to want documentation. They're going to want to know how you came up with that number with what you're being paid as an employee. Now, once you determine what your reasonable salary is going to be, you're going to register as an employer with the state and the IRS, and you're going to choose what your payroll schedule is going to be. Are you going to get paid weekly, bi-weekly, monthly, bi-monthly? You're going to determine what your schedule is that you're going to utilize for being paid from your S corporation. And these are the steps to actually paying yourself. The very first thing you're going to do is calculate your gross wages. This is the amount that you will be paid in a single pay period before any deductions, before any tax withholdings. You're going to take your annual salary and divide that by the number of pay periods within the year, and that's going to determine what your gross wages are. You will next deduct any pre-tax deductions that you have. So within your business, if you have any deductions that are coming out pre-tax, such as retirement, friends benefits, maybe some health insurance, those things are then going to be subtracted from your gross wages. The next thing you're going to do is calculate and withhold any FICA taxes you may have, any federal income taxes you have. And if you live in a state that has state taxes, you're also going to have to calculate and withhold state taxes as well as local taxes. And if there are any other deductions that may come after that, such as any garnishments or anything, at that point, you are going to deduct that as well too. Once you're done with that, you will have all the amounts that you need, and then you're going to simply pay yourself from the S Corp to yourself as an employee. So that can be as simple as writing a check. You can do a transfer, which you will want to actually make that payment. Any taxes that were withheld from the payment that you received from your S corporation, at that point you are going to deposit it with the correct taxing authority, whether it is the IRS or whether it is the state taxing authority. At that point you will want to submit those taxes. So that's the process if you are deemed to be an employee of your S corporation, where you will pay yourself from your S Corp. Now let's talk about paying yourself as a shareholder. As a shareholder, you can pay yourself through a distribution. Now, the good thing about distributions is that they are not taxed as self-employment income, and you do not incur any additional taxes on it. This is usually a simple transfer from your business bank account to your personal account, and it is recorded within your books. But the most important fact to remember about distributions is that distributions are not allowed until after you paid yourself salary. So why is that? That's the whole point of being an S corporation, because of the tax savings that you get through running payroll. And if you don't run your payroll correctly, then you're going to lose those savings. So theoretically, what it should look like is that if your business is making $150,000 in income, you have a reasonable salary of $50,000, that will leave the remaining $100,000 to be taken as distribution, as opposed to that entire $150,000 to be taxed. You definitely want to make sure that you are going through this whole process correctly, because if you're taking distributions and you're not running payroll, the IRS can reclassify everything as wages and hit you with back taxes, penalties, and interest. And we know we just don't want that to happen. But furthermore, when you run payroll correctly, it helps you when it comes to getting loans and getting funding for something, because you have pay stubs, you have W-2 income, you have clean books of where your money went, how much you're receiving from it. So when you go to buy that house, when you're trying to get business credit or you're looking for maybe real estate investment, you will have that support and documentation in order to help you qualify for any loan or funding that you're trying to get. And lastly, it gives you peace of mind. Knowing that your salary is handled and done correctly means that you don't have to stress when tax time comes. You don't have to worry about whether you are underpaying it anyway, and you don't have to worry about interest, penalties, and fees that come with when you're doing something incorrectly with the IRS. So here are some tips that can help you effectively navigate the whole paying yourself as an S corporation. One, do not hesitate to utilize a payroll provider. There's a lot of numbers that goes into running your payroll. It's a lot of events that take place when it comes to submitting reports to the state, submitting reports to the IRS. There's quite a few payroll providers out there. You can look at Gusto, you can look at ADP, you can look at QuickBooks Payroll. There are quite a bit that are out there, but don't be afraid to utilize them, because they will run the payroll for you. They will file your W-2s. They will handle all the taxes and the reporting for you automatically once you do sign up to work with them. To make it easy on yourself, don't hesitate to reach out to one of those companies. You also want to have separate bank accounts. So you will want to have a separate bank account for your S corporation that you are processing your payroll from, into your personal bank account that the payroll is going into. You don't want it going into the same account, because that is not legitimate when it comes to the IRS. They consider that to be commingling funds, and If they realize that it is being done, you can be hit with fees and penalties. You want to keep your bookkeeping system up to date and accurate. As you're running payroll, make sure that you are recording it within your accounting system. Make sure that you know what you're paying in taxes. Document what is actual salaries and what is actually taxes, because you're going to need that information when tax time comes. And if you don't have it, you'll be scrambling all over the place to figure it out to make sure that it's reported correctly to the IRS. And lastly, don't be afraid to work with a CPA or someone that is knowledgeable about processing your S Corp payroll. Again, you don't want to find yourself in a situation where you did not do something correctly, you did not report something correctly, and then you're hit on the back end with a lot of fees and penalties, and you've in essence eaten up all of the savings that you would have had if you had process that payroll correctly. So I hope this video has been helpful for you. If you're still not sure on how to pay yourself as an S Corp or what to pay yourself as a reasonable salary as an S Corp, we can fix that today. I offer personalized tax strategy calls where we go over your income structure, how you can pay yourself, and how you can use your S Corporation to save on taxes. Click the link in the description box to book your session now. If you find this video has been helpful for you, make sure you drop a comment below and tell me how you're currently paying yourself. I would love to hear from you. Don't forget to like and share this video and subscribe to my page if you want more content on how to run your business effectively, how to pay yourself, and how to build real wealth within your business and your investment. I look forward to seeing you in the next video. Bye.